China is becoming increasingly concerned about the potential risks from fintech giant Ant Group's involvement in online lending. Well, co-founder Jack Ma and other senior Ant executives have been summoned for a meeting with Chinese regulators, and comes just ahead of their mega IPO debut this week. Ant Group could face increased scrutiny and be subject to restrictions on capital and leverage that's similar to banks. Beijing is concerned about potential financial instability that could result from Ant Group's rapid growth. Recent commentaries in state newspaper have also warned of the risk of internet giants like Ant becoming too big to regulate. Well, Ant is due to start trading on Thursday after raising about $34.5 billion in what's said to be the world's biggest stock market debut.
China putting the brakes on the world's biggest IPO. Ant Group's listing in both Shanghai and Hong Kong have been suspended. The Shanghai Exchange citing major issues, quote.
Welcome back. I want to share some very big news that has been developing this morning out of China. Of course, as our viewers know, we've been following the prospective IPO of Ant Financial, the largest initial public offering of all time, not listing here in the United States, but would be listing or was said to be ready to list in Hong Kong and on the relatively new STAR Market in Shanghai. And again, distributing shares around the world, including to many U.S.-based investors. All of that appears this morning to be going up in smoke. The Shanghai Exchange, and we also know Hong Kong as well, have both essentially suspended the listing this morning. It's very much not completely clear, at least at this point, what is at stake here. And we're going to get to Eunice Yoon in a moment to try to help us understand exactly what's going on. But what appears to be at issue, to some extent at least, is the capital reserves that the company has, regulation in general. There was reporting that Jack Ma, of course, the founder of Alibaba, former CEO, chairman of that company, who Ant was created under. Remember, it was once a part of Alibaba. Their Alipay system was developed there. That he had a meeting with regulators. He'd been somewhat critical of the regulatory function. But again, a lot we don't know. What we do know is Shanghai and Hong Kong stock exchanges have suspended this. And there is concern that it will go to the heart of the business model, which is that they'll need a much higher reserve requirement, which, of course, would impact their ability to make money. I can't emphasize enough the gray market trading that's gone on over these last few days in this stock. Really a lot of things to unwind. Let's get to Eunice Yoon, who can join us now and perhaps shed more light, Eunice, on what is a developing situation, to say the least.
Yeah, that's right. The Shanghai stock market, just as you said, just tonight had said that it is delaying the IPO. And the reason that they gave was that they said that Ant Group had recently reported to China's securities regulator about the significant changes in the regulatory environment, and that this major development, the exchange said, might make Ant Group fall short of listing requirements on the information disclosure. Now, as you had pointed out, the IPO was supposed to take place both in Shanghai as well as Hong Kong on Thursday, but now it is not going to happen for an undisclosed period of time. We spoke to Ant. They issued a statement and said that they were notified by authorities, and that because of that, as a consequence, Hong Kong would also suspend its IPO. In terms of some of the speculation that you had talked about, this does come after Jack Ma, as well as other top executives at Ant, had been summoned on Monday to talk to the regulators at the banks, the banking regulator, as well as the securities regulator, currency regulators, about this IPO. And it also comes after a speech that he made on Friday, which was very widely reported, in which he was highly critical of regulators for not supporting the fintech industry enough. He also made some comments on the Chinese economy, which raised eyebrows, because when asked about the Chinese economy, he said, and if the Chinese economy has systemic risk, he said that the Chinese economy wouldn't have systemic risk because it has no system. And as you well know, Jack Ma is quite a flamboyant guy. He's a very he kind of is free and easy with his language, and so David, because of that, that is raising speculation among the tech community as to whether or not this is seen as punishment from the regulators for his very vocal criticism of the Chinese system.
Yeah, Eunice, I mean, again, these are reports that we're getting that the online loan regulation, and obviously online loans are an important component of Ant's business, that they will force the co-lending ratio to go to a minimum of 30%. Right now, it's about 1%. And that's where you make your money. Do you have any confirmation that that's possible? Because that will upend the business model of Ant if and when it does finally list.
Yeah, I don't have any confirmation of that, but there has been quite a bit of criticism and concern about what people here see as systemic risk within fintech, that Ant would be able to would be given a pass because it wouldn't quite. It's kind of, as you said, living in this gray area, and that the regulations aren't there yet for this company. So a lot of concern about that, and it looks as though that could be one of the reasons why, or at least that's what people are saying. This could be one of the reasons why Ant Group is being more heavily scrutinized by the regulators.
Eunice, it's a story we'll be watching closely, of course, as we were, as you say, getting ready for this thing to start trading on Thursday. The largest IPO of all time. But, Carl, it doesn't look like it's coming anytime soon. And if it does, its business model may look a lot different.
This app handled more than $15 trillion of transactions last year. That's more than MasterCard and an amount of money that's similar to the European Union's GDP. It also has more than 900 million users in China. People use Alipay on buses and taxis, to pay their utility bills, shop in stores and online, and even to buy insurance and make investments. And yet many Americans may have never heard of it.
And it's huge in China. The Alipay app is essentially a financial supermarket that allows you to do everything on your mobile phone.
Alipay's parent company, Ant Group, is getting global attention in 2020. Its combined IPOs in Hong Kong and Shanghai could be one of the largest listings ever, as Ant is aiming for a market valuation in excess of $200 billion. That means it may sell more than $20 billion in shares when it goes public. So what is Ant and how did it become so big? It all started with Jack Ma, the flamboyant Chinese businessman who's known for his inspirational speeches.
It's not about the money, it's about the dreams.
Extravagant performances at company parties. And of course, co-founding Alibaba more than 2 decades ago, which has since become a $500 billion online shopping giant.
Alibaba is like a mix of Amazon, eBay, and PayPal, also with a dash of Google. But it handles more business on its shopping sites than any other company in the world.
When Alibaba was just starting out, it created Alipay as an escrow service to hold money from buyers and release the funds to sellers after the goods had been sent and received. This built trust between merchants and buyers and helped to pave the way for the e-commerce industry boom in China. Not that many people in China have credit cards compared to the US. With Alipay, most people draw funds directly from their bank accounts and make cashless electronic payments without needing to use credit cards.
In China, you barely see anyone use cash anymore, whether it's to buy a soda or a pack of cigarettes. People buy things with QR codes and facial recognition.
In less than 5 years, Alipay has expanded to become a ubiquitous app that touches other parts of life. Today, Ant Group encompasses not just Alipay, but a broader range of financial services including microlending, insurance, and one of the largest money market funds in the world called Yuebao.
So it's a really flexible tool that gives the average Chinese consumers and small business owners who have long been ignored by the major banks a taste of what it's like to be able to invest and save money and to get financing to fund operations. And all of these are done just through their smartphones almost instantly.
But the rapid growth of Ant has drawn scrutiny from banks and regulators as previously reported by the journal. Some Chinese banks were earlier concerned that Ant could take away their deposits and reduce how much cash people use. Ant is trying to shed its image as a disruptor of China's banking sector. This year, the company dropped the word financial services from its name in order to rebrand itself as more of a tech company. It also partners with many banks that fund the loans it makes and has made its money market fund less risky.
Regulators, especially the central bank, they are very concerned about potential liquidity risk in one single fund on the Yuebao platform. The problem is if all investors in this fund decide to draw the money at the same time, it could cause a huge liquidity risk and even damage the stability of China's financial system.
Ant responded quickly to regulators' concerns by imposing caps on how much people could invest and opening the platform to rival funds.
While Ant may have been a bit reluctant to do that to some degree, its cooperation with the government really is crucial because in China, very few businesses can succeed without blessings from the regulators.
Outside China, Ant's attempts to expand have sometimes gotten entangled in politics. In 2017, Ant tried to buy U.S. money transfer company MoneyGram, but the deal was scuttled by U.S. officials because of national security concerns.
That was a really big blow to Ant's ambition to expand in the U.S., which is a very large and potentially lucrative market.
And this time, Ant's dual IPO with Alibaba will bypass New York. A person familiar with the company said Ant never intended to go public in the U.S. It has its eyes on India and Southeast Asia, where consumers and businesses are underbanked similar to those in China. But Ant's plans aren't to launch Alipay in those markets.
Ant never intends to serve consumers outside of China via Alipay directly. Their approach is to provide some tech or operational expertise in some mobile payment startups in those markets, but they don't really run this business in-house.
And since Ant has already captured the biggest market in the world, it's been laying the groundwork to follow the millions of Chinese tourists who go abroad every year. The company has increased partnerships with retailers and restaurants overseas. While the pandemic has stifled much of global travel this year, the company is not seeing a slowdown of online shopping and cashless payments in China. Though Ant will make global headlines when it hits in Hong Kong and Shanghai, it may remain a household name only in China.